on Bloomberg Quint.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. Yogesh Mehta of Motilal Oswal Securities and Senthil Manikandan of Newberry Capital joins us on the show. Today on Hot Money, we'll discuss stocks like ONGC, Pidilite, Aurobindo Pharma and ENIL. So these are the stocks that we'll be discussing on Hot Money today. Let's start with the first one, and that is ONGC. Came out with numbers which were rather disappointing, but the counter has managed to react positively. So the big question we're asking is, what do you make of the numbers, and is there potential for someone looking to invest that could put in some money into ONGC? Senthil, I'll start with you. What did you make of ONGC's numbers and what's the outlook?
So first on the production figures, the crude oil production was expected to be on the higher side, but it came on the lower side because the production decline of around 3%. On the gas side, it was in line with expectation. There was a growth of around 2.3% year over year. Realization was in sync with the global levels, around $66 per barrel. But on the gas side, it was higher. So on the overall, I think it was a neutral kind of results, but I think the stock price is available at a huge discount to its fair value, majorly because of the sentiment factor of government's involvement. So going forward, I think the major factor that is going to decide on the movement between the intrinsic value and the stock price is going to be the government's involvement and how the subsidy is sharing, if at all it comes. So we are quite neutral on the stock.
Okay, quite neutral. And what did you make of the numbers? What is the house view on ONGC?
House view is still we have a buy, but we have reduced the price target with the P multiple because of the numbers are not that much in line with what we expected.
Okay.
For FY18, if I summarize, then EBITDA had grown by a mere 22%, but PAT was up by hardly 11-12%.
Okay.
So even realization for the whole year, if I consider, last year was around $50.5 per barrel, and this time FY18 it is 57, so it's a 14% jump. Even after 14% of jump, PAT is not there. The PAT has not shown. Now, whatever incremental capacity addition is there, will production of gas will inch up by 15% annually. So we don't foresee much of a excitement into the result and ongoing subsidy sharing, as Senthil mentioned, that subsidy sharing will remain a hangover over a period of a longer period of time. So that will impact the profitability of the company. So we are not so gung-ho about. Okay. So we can choose some alternatives over ONGC then.
Okay, so I think that's the view that we are getting in on ONGC. Not the best of views that are coming in. More of neutral views that are coming in. There are better alternatives that our guests believe can be taken. We'll throw it up open for discussion. Yogesh, I'll start with you. What seems to be the primary concern that, now initially the concern was, ONGC buying stake in HPCL, but now despite that, after that, crude has risen significantly, but ONGC hasn't moved. What seems to be the big concern that you all as a house have on this on ONGC?
See, as a house, we have a concern over profitability, that this will not incremental will entrust into the profitability of the return on equities and return on capital employed, as well as the investors' return. So there always, if the crude is down, then there is again a concern over the realization. If crude is higher, then there is a subsidy sharing. Okay. So in all the aspects, it is in a dilemma situation that when this company will make money. Of course, then it needs capex every now and then. So FY19 they are planning for around 32,000 crores as a capex. So these all are seems to be OVL is also now trying to get into more incremental growth into the production, but it will take some more time. So we believe that at around 8 times P multiple it will be fairly valued, and FY20 basis, so it will be a 218 rupees kind of a target. So it will not much of a excitement.
Do you think if this subsidy actually comes in, there was this news that the government is considering this tax because crude is going up, they considering ONGC helping out the oil marketing companies. If that actually comes in, what will be the impact on ONGC?
Right now, they're enjoying nil subsidy since last 6-7 quarters.
That's what I'm asking. So if
that comes, then this profitability will get hit by, say, almost 25-27% minimum. Because right now, if state government is not ready to cut down their VAT, on this, then it needs to pass on to 2.5 rupees immediately from overnight.
Okay.
So that will boil down to something like a negative impact on the profitability further. Then again, we will have to cut down our price revised target. What we have seen earlier in FY17, stock went down to 140, 150 because of subsidy sharing. So that remains a hangover. It's a hanging sword over them.
Okay. What about you, Senthil? Do you see volumes returning for ONGC in the near term? Because that has been rather lackluster over a period of time.
So I don't see volumes returning, because if you look at the management guidance for the next year, it's a flat kind of guidance. This year, if you look at the total crude oil production target of around 25.2 million tons, next year target is also on the same level. So there is not going to be any volume growth coming in for the next year, of course. But after 3-4 years, I think there going to be a substantial improvement in the volume, because of their production volumes going to come from the marginal feeds. But that also we have to look at how the government is going to price those oil coming from over there. So in the energy space, our view is that looking at ONGC or other production companies, one has to look at the city gas distributors.
Okay.
Because there I think there is a lot of value, and government is also pushing for a more gas consumption because of its more environmental friendly. And the regulations on the city gas distributors are favorable for them.
Okay.
So once they get the license, they are like a kind of monopoly for the next 20-25 years. So I think one has to look at these kind of scalable businesses in the energy space.
Which one do you like? There are a couple of them. MGL, there's IGL, there's Gujarat Gas. I think these are the three ones I can remember. Anything that you like in particular?
So we like IGL particularly because of their presence in the Delhi and the NCR region, where there is a lot of government's focus on the bringing the natural gas into the people's consumption side. While MGL is in the Mumbai region, where there is not much volume growth coming for the company, but now I think the company with now the government is coming up with a lot of auctions for these city gas distributions across India. Around 80-90 cities are coming up. I think this is also could be an opportunity for MGL to diversify across the states.
Okay, so that's the view that's coming in. I think ONGC, the consensus view is not a buy at this point of time, wait and watch approach, but there are other better plays like the gas distribution space that Senthil spoke about. The next stock we want to talk about is Pidilite. The counters trading near record highs. The big question is down almost 3%, but yesterday it did manage to hit it. The big question we're asking is will the rally continue in Pidilite going ahead? I think one of the key negative point on Pidilite would come in is because of the entire MSCI issue that is going on, and Pidilite was supposed to come into the MSCI this time around. But nevertheless, let's leave that aside. Focusing on fundamentals, Yogesh, Pidilite, what views do you all have on Pidilite? Do you like the stock?
Yeah, we like it very much because it has shown a strong comeback into the competition, and they have increased shareholders' value in terms of last 5 years, 7 years or odd. And this is a performance, if you compare, that is up by 90% over FY17, the stock price. So overall, it seems that this company has a fairly bright future in terms of product and all what they are manufacturing and the reach ratio they have. So we believe that yes, it will incrementally from current level also there is a huge, there is not huge room, but room for upside, because if you have to play from unorganized to organized sector, then post Titan this will be the only company where you can bet on.
Okay.
So if we are valuing at 50 times, then still there is a more room to upside, but hardly 10-15% at 1330 rupees price target. So 50 times. Now there could be some reasons of or counter argument about not to buy at this level with 10% upside. So that would be that is acceptable. But as a fair play FMCG, this is one can bet on.
Okay, so it's a bet that Yogesh is saying that they can take on Pidilite. And what's your view on Pidilite?
So we like the company and the business, but not the stock at these current levels, mainly because the valuations are currently full. We like the business because they have a 70% market share in the organized segment, and around 1/3 of the market in the entire adhesive segment. So like last 3 quarters, their volumes grew by double digits. That's on the positive trend. But if you look at the last 5 years, their sales grew at a CAGR of around 12%, while the PAT grew at a CAGR of more than 20%. This is on the background of the substantial expansion in the operating margin side. So their operating margins went up from 15 to 22% this year. This is because of their raw material decline. So now what you are seeing is last quarter their key raw material is vinyl acetate monomer, that is up nearly 40% from $975 to around $1,300. So we have to look how the management is going to pass on this price increase and keep the margins at the current levels. So at the current PE of around 60 times this year's earnings, it looks bit expensive.
Okay, so I think that's the view that's coming in on Pidilite at this point of time. Yogesh, I think the point that he raised in terms of they've been, because of benign raw material prices, they've been enjoying good margins, but now raw material prices have also gone up. Do you think that margin hit pressure will come in into Pidilite over the next few quarters?
For fourth quarter, they took a hit and EBITDA margin was shrunk by almost 60 basis points. So company, when we spoke to them in the con call, they mentioned that they have taken a price hike of 2 to 5% across the products and many geographics and many a product lineup. So there, and the price hike will continue for first quarter of FY19 also.
Okay.
So these two put together, they'll be able to pass on some of the cost which have risen on the raw material side to the end customer.
Okay.
So there is nothing deep out of the pocket from them. So that will have some set of effects on the profitability for this year. But however, as Senthil mentioned, I agree with that. With the valuation is a concern where the discretionary play is best of the breed, but valuation is something that we are taking our hands out of that.
Okay, what's the target price that you all have?
The target price is 50 times FY20 P multiple would be 1330 rupees.
1330, because I think we have one of the questions, he said that by Rahul Kamda saying that can it rally to levels of 1300? So yes, Rahul, according to Motilal Oswal's target price, they have a target price in excess of 1300, so probably that is where it can reach. Senthil, which are the key segments of Pidilite that can drive growth for the company, and which is where you would have a little bit of concern?
So key driver would be the construction segment. If you compare with the developed economies or even with China, the use of construction chemicals in India is very low. And even just yesterday we attended the analyst meet of Astral Poly. Okay. That company is also into the adhesive segment. So where the management mentioned about the substantial growth in the construction segment. Because if you look at now even all these houses are coming up with tiles and modern equipment, this has to be substantiated with the construction chemicals, unlike previous, like 5-10 years back, the cement is the only material which used to construct these kind of houses. Even if you look at the market, if it grows around 10-12%, Pidilite will also grow at the same levels. Okay. So they can't outgrow the market because they are 70% of the market. So we look at the second player in the market, like Astral Poly, that is going around 18 to 20% kind of growth. Okay. I think one can look at this company for the adhesive.
Okay, so I think the view on Pidilite is that not a way, because of valuations is something that both of our guests did point out. Motilal Oswal obviously has a much higher target price for Pidilite given the EPS and PE multiple, but Astral Poly is something that Senthil is saying should be looked at this point of time as a substitute to Pidilite. The next stock we want to talk about is Aurobindo Pharma. Came out with weak set of numbers. The counter was down post the numbers, also trading down slightly in trade today. The big question we are asking is that will the downtrend continue in Aurobindo Pharma going ahead, and what did you make of the numbers? Senthil, what did you make of the numbers and what's the outlook?
So numbers were that bit weaker because of their sales drop in the ARV segment. But we attended the management call where the management guided like the price erosion is going to be in the range of 5 to 8%. Plus there was concern of the higher inventory levels, which the management mentioned, like because of their eyeing for new opportunities in the NBO side. Plus they want to bring down the penalties which they were getting earlier, so they want to keep the inventory levels at the higher level. So a couple of issues with the working capital pressure, but apart from that, sales growth guidance of 8 to 10%, and the valuations also are not bit expensive at around 14 times FY19 earnings and ROE of more than 20%. The stock looks good, but one major thing one has to watch out for their guidance on the debt reduction. So they have guided for more than 100 million debt reduction in the FY19. So that has to be watched out for the company.
Okay, and what about you? Or what is your view on Aurobindo Pharma? What did you make of the numbers?
See, as Senthil mentioned, that valuation is inexpensive. So from this level, downside is very limited. Looking at the current scenario of growth in the US, which is contributing almost 43% of the sales, and rest of the world and Europe contributes 33%. So there we believe that 10% profit margin is 10% growth in profits for this financial year is not that great, but the downside risk is very limited because the unit 6 and 12 both have got EIR. So production should restart again, and that should start exporting to the US markets. However, this time it was 80% of the business on the API side, on the formulation side, and API 20%. So there was some recall on US markets, and that's why the US market was not hardly 6% up. But what we believe is that on the key ratios and fundamental ratios, we believe that down for the valuation comfort is very high, and from 560, 570 level, downside risk is very limited for investors. It is just a wait and watch. Waiting time is high.
Okay, so it's a wait and watch approach for Aurobindo Pharma. That's what the guests are saying. Yogesh, why does, and it's been a trend that Aurobindo Pharma always trades at a much cheaper valuation. If Sun is trading at 20 times and Lupin is trading at 19 times and everyone's trading in the range of 20 to 25 times, Aurobindo is at almost what, 12, 13 times or 14 times probably. Why is it that it's getting such a bad multiple?
Because they are more 70% of the business into export, and over 125 countries they are exporting to different injectables and all. So that products are very much sensitive, and new launches which are there on omeprazole and all are very much waiting in the pipeline since last so many long time. And now they are getting clearance of maybe first quarter of FY19 and the third quarter of FY19 will get launched. So that's why maybe the dependency is very large on this, and domestic business is hardly anything, and rest of the world or sometimes Europe is a problem. So that's why maybe a pursuance of the people where it is getting a lower P multiple.
Okay, we have a query. Someone is saying, Yogi is asking, can Aurobindo Pharma be purchased for 5 years? I think valuation is 5. Would you recommend someone to purchase it? If someone's looking for a 5-year perspective, is pharma and Oro the space to be?
Yes. So if somebody is looking at 5 years kind of a period, then definitely it's a buy. And there will be again a disclaimer would be there if there is any US FDA import alert or anything, something like
or an auditor resigning,
or an auditor resigning, of course. Then that should be looked into very sensitively and take your decisions accordingly. But yes, for 5 years, besides these reasons, it's definitely a buy.
Okay. And what about you, Senthil? The guidance given was price erosion. They believe 5-6. But they did mention that price erosion is moderating out. In the pharma space, would you select an Aurobindo Pharma given its valuation, or someone like a Sun Pharma which has given a much better guidance in terms of growth? Just your overall view on the pharma space. Would you prefer Oro low valuation or a high valuation, high growth stock?
So Oro, what you have to look out for is next 2 years they're going to be higher spending on their investment phase. Like they have going to couple of biosimilars are going for clinical trials in the next 1 or 2 years. So their R&D spend currently stands at around 4.5%, which is expected to go up in the next 1 to 3 years. So once they get into a couple of complex products, there may be some confidence in the market and the valuations may re-rate. But while Sun Pharma and the other side, like you mentioned, it is trading at 20 times earnings, but it is the market has corrected its prices along with its fundamentals. So I don't see any value in the Sun Pharma at this price also. So we have to wait and watch how the specialty segment is going to perform the next way and then take a call.
Okay, I think the consensus view that we're getting in on Aurobindo Pharma at this point of time is the fact that valuations are in favor for Aurobindo Pharma. Obviously, for a long-term perspective, it can be accumulated. And the last topic we want to talk about is ENIL. It's been on a downward trend for a while now, but over the past few days, there has been a little bit of traction that's happening. The question we're asking is it the right time to start accumulating ENIL, which has fallen significantly? Is it part of a momentum play? What did you make of it? Do you like ENIL or the radio space? Or do you like anything in the radio space as such?
So we don't like the entire radio space because if you look at the entire industry size is around 2,800 crores and it's growing at around 6 to 7%. What are the next 3 to 5 years? What are the major impacts for this segment is going on is the music streaming apps. So now the current users of music streaming is around 80 to 90 million users. But with cheap data coming in, there is substantial increase in these users in the music streaming side. Second one would be the the digital pie in the entire data the advertising pie. Now the digital share is around 15%, but it is growing at around 30% every year.
Okay.
While the traditional advertising like TV or radio is growing around 6 to 7%. So definitely I think digital is gaining market share, and particularly radio business, I think they are heavily fixed operating business. They have to pay for those licenses, frequencies, and they are majorly dependent on a single source of income, that is ads.
Okay, time is up. I'll come back to the digital discussion, but firstly, your opening statement on ENIL. Do you like the counter? What's your rating and targets on ENIL?
We like ENIL, but and we have a buy rating on that, though we have a reduced price target from 830 to now 770 post results, because we don't see thrust into that business much, as Senthil mentioned, that digitization is taking over on the readership, on the listenership. So that will have some impact, and we think that legacy stations, which are contributing almost 80-85% of the revenue, they are growing with the higher mid or maybe a lower single digit. So there is a concern, and we believe that it will take some more time, and the legacy stations to turn up on festive season and other stuffs will have maybe 6 months more time. It will take more. So valuation comfort is there, but we don't foresee that there is any excitement into this investment as an investment in this stock.
Okay, not an investment stock is something that Yogesh is speaking about. Did the management say something in the con call? Because I think the general trend that they spoke to media channels was that they believe that the fourth quarter was weak, but they believe that the worst is over. Is that the sense that you are also getting?
The worst is over. It seems that every time management always gives expected, hopeful statements and that kind of a statements. But we believe that whatever will turn up into their stations and new launch, and they've taken over the TV Today 3 stations. So that will take some time of at least FY20 first quarter or second quarter onwards. So we don't foresee that something will turn overnight positive for the company, and EBITDA will have some kind of still it will get hurt over a period of time.
Anything else in the radio station space that you're like? ENIL is the leader right now, it's the largest company. Yeah. But anything else that looks attractive, or do you all track any other radio station?
We have coverage on music broadcast and ENIL only, so there is no other on the radio station side. We don't have any TV Today coverage. So ENIL is the only one where...
and that would be the preferred one over...
that would be the preferred one, but we have covered as a thematic sector, so that's why we have covered these two.
Okay. Do you like anything else in the radio space, or would you stay away from ENIL also? You said that you don't like it. What is the key concern that you have apart from, and you were speaking about digitization, so you can continue that, and apart from that, what are the key concerns do you have?
The key concern is, if you look at the FY18 figures for ENIL, so they went in for a ad cut because they want to increase the customer experience. So per hour, if you look at the radio business, they add ads around 13 to 15 minutes. This is substantially higher than the TV segment. So if they go in for an ad cut of 15% ENL, their profits dip substantially.
Yeah.
And if you look at the ad revenue per second, is also substantially less than the TV segment. Making or having a one source of income is the major risk for this entire radio space itself.
Okay, so I think not too gung-ho about the radio space. We just have a viewer query. We're getting a lot of them. We'll just take one. Dheeraj has asked, and we'll go back to the last talk. Yogesh, someone's asking, Dheeraj is asking Oro or Lupin for a time frame of 5 years. Which is a better choice?
Of course, then on a valuation as an inexpensive valuation would suggest that Aurobindo would be a preferred pick than Lupin. Okay,
so that's the view that's coming in. But with that, we're completely timed out on Hot Money. Senthil and Yogesh, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quiz.